Joining us right now to talk market strategy in the week ahead is Sylvia Jablonski. She's the CEO and CIO at Defiance ETFs. And Sylvia, the big number that we have, first of all, coming up this week would be CPI and then PPI. Looking at those inflationary numbers, it's going to tell us a lot about what to expect from the Fed. How much is riding on that?
I think so. Good morning, Becky. I think a lot is riding on it in terms of the short term and how the market reacts to it. You know, whether or not we have another pullback week like last week, or whether we kind of resume the rally that we've seen in the first half of the year. I think the bigger picture, it doesn't matter so much what happens, in one particular read at this point. We know that inflation is coming down. We know that it's not at the Fed's target, but it has come down quite significantly. And if we keep kind of going in that direction and the economy is holding up, overall, I don't think it's as big of an issue as it was in the months prior to these readings coming up.
Do you think that the Fed at this point is likely to sit on its hands for at least the meeting now? Maybe they act in November if they see more trouble signs pop up, but maybe they're happy with where things stand at the moment?
Yeah, I think the Fed is likely to sit on their hands, and I think they're going to take in the data that they see in the coming months and see where that gets us. I do think that they're likely to hold rates higher for longer than maybe we anticipated, but I don't anticipate any major increase to the rate hike intentions. But what the Fed does is highly important to the future of the market. I think that we're set up to have a rally into the end of the year, but what can turn that around would be actually the Fed unexpectedly raising rates and deciding that inflation is stickier than they had hoped it would be.
Let's talk about a couple of the other events this week. Maybe the most important being UAW, what it decides to do, whether it goes on strike or not. What I had been hearing earlier is that even if they go on strike for as little as 10 days at the 3 U.S. automakers, that would be enough to send Michigan into a recession. Less supply on the markets would bring prices back up for cars after they've been coming down, and that's an important aspect of the inflationary readings that the Fed's watching. You've got oil prices that are a little higher, too. I mean, could something like that, an extended strike, be the issue that pushes all the way back through and maybe changes the Fed's mind?
I think it's a storm that can certainly brew and turn into a major disaster for the markets. It'll be really interesting to see what happens with that. But I would also kind of flip that and think a little bit more about what that could mean in terms of perhaps electric vehicle demand and electric vehicle production and things like this. So, it'll be really interesting to see what happens there. But in terms of just the prices of oil that are becoming, more expensive and perhaps impacting the bottom price tags of oil and gas vehicles. And then on top of that, supply and demand issues, you might start seeing new car buyers starting to look at EVs where you don't necessarily have these issues.
All right, Sylvia, put all that together. What do you tell investors to do right now? We've got through August that looked like it was going to be a pretty rough month, but things ended okay in August. We've had a down week last week for the S&P and the NASDAQ, but if you're looking this morning, futures are indicated sharply higher across the board.
Yeah, so I think, just overall broad-based dollar cost average, you get in on these pullbacks that we saw last week and ride into the rally towards the end of the year. But to the last conversation that we just had, I actually love the EV trade now. Had that big upgrade on Morgan Stanley that we were talking about a little bit earlier on the show, Dojo with Tesla, the top 5 electric vehicle makers are absolutely set to rally in the next few months. And I think that's going to be a 5 to 10 year trade as we try to go carbon neutral. We see billions of dollars going into converting manufacturers and batteries into actually creating more EVs. So I think that's a great opportunity right now for investors to get in.